The coupon paradox, how every bill hides a payment you've already made. 1. The anxiety of the envelope. Most people feel it, the mild panic that comes when a bill arrives. It could be a credit card, mortgage, or property tax, yet it always carries the same emotional tag, stress. Bills are the universal reminder that we owe something. But what if the truth was more ironic? What if every bill you received already contained the means to pay itself? So what does that actually mean? It means that what appears as a debt notice may also double as a check. The catch is that no one tells you this, because you were never supposed to notice. Footnote. This section introduces the concept that most billing statements inherently contain a redeemable payment instrument. 2. The hidden check. A bill isn't just a demand, it's an instrument. Look closer and you'll find routing numbers, account numbers, barcodes, and structured fields that look suspiciously like a check. That's not a coincidence. It's a disguised negotiable instrument. So what does that actually mean? In commercial law, anything that fulfills the structure of a negotiable instrument can be endorsed and settled. The missing pieces are simply your endorsement, an instruction, and the will to use it. In other words, you were sent both a debt and its remedy in the same envelope. Footnote. This section explains how billing statements conform to the form of negotiable instruments capable of settlement under commercial law. 3. The 1933 reset. To understand the joke, we have to revisit its setup. In 1933, the Emergency Banking Act and House Joint Resolution 192 changed everything. The government removed gold and silver, constitutional money, from circulation. In doing so, they outlawed payment in real money. So what does that actually mean? It means every transaction after 1933 is discharge, not payment. Since no lawful money exists, the system had to create a new way to balance obligations, through trust accounts and negotiable instruments. What used to be settled in coin is now settled in credit. Footnote. This section outlines how the removal of gold and silver led to the creation of discharge mechanisms under HJR 192. 4. The trust in your name. When you received your Social Security number, you didn't just get a government ID, you inherited a trust. This account, held in your legal name, in all caps, was created to discharge your public debts. Think of it as an invisible bookkeeper assigned to every citizen. So what does that actually mean? It means the person named on your bills, the one in capital letters, isn't you, the living man or woman. It's the corporate entity operating under the Social Security Administration's jurisdiction. The real you is the beneficiary of that trust, not the debtor. Footnote. This section explains how the Social Security Trust functions as a public discharge mechanism for individual debts. 5. Payment by signature. Since real money was replaced by credit, the only thing left with lawful power is the signature. Your autograph is the new gold coin. When you endorse a coupon, you authorize the system to pull the necessary credits from the trust already funded in your name. So what does that actually mean? It means your payment doesn't come from your job, your bank, or your wallet, it comes from the same national credit that your signature activates. When you send a check from your personal account, you're simply layering fiction upon fiction. The proper discharge is to endorse the coupon, not pay with debt. Footnote. This section explains how signatures serve as lawful authorization to draw from pre-funded trust credits. 6. The illusion of payment. When people send bank funds to pay bills, they're actually extinguishing one promissory note with another. That's why debt never seems to end, it's circular. True discharge occurs when the obligation is offset against the credits already created on your behalf. So what does that actually mean? It's like trying to put out a fire with gasoline, both are still flammable. The modern payment system runs on perpetual IOUs, and your labor keeps the fire alive. Footnote. This section clarifies the difference between paying a debt with new debt versus discharging it lawfully. 7. The all caps corporation. Every bill is addressed to an entity in all capital letters. That's not typography, it's a legal distinction. Capital letters signify a corporation, not a living being. Your trust name matches that format because, in law, corporations transact, people don't. So what does that actually mean? It means you're being asked to act as the authorized representative of your corporate self, not the living beneficiary. Once you endorse the coupon correctly, the obligation transfers to the system where it originated. Footnote. This section highlights how legal naming conventions separate living persons from their corporate counterparts. 8. The legal definition of payment. In Black's Law Dictionary, 4th edition, payment is defined as the performance of an agreement or fulfillment of a promise. It does not require money. The act of endorsing, performing, or authorizing discharge satisfies the definition. So what does that actually mean? It means payment is not an exchange of paper, it's an act of performance. Once you perform by endorsement, you've completed your obligation under commercial law. The rest is just bookkeeping. Footnote. This section redefines payment as lawful performance rather than exchange of tangible currency. 9. The remedy hidden in plain sight. The system doesn't hide your remedy, it distracts you from it. The endorsement space at the bottom of a statement is an invitation to settle. The printed numbers, codes, and detachable slips are evidence of existing credit, waiting for authorization. So what does that actually mean? You're the only one who can activate the settlement by signing correctly. Everyone else, banks, agencies, collectors, just shuffle paperwork waiting for your permission to close the account. Footnote. This section emphasizes that redemption is achieved through authorized endorsement rather than financial contribution. 10. The life skill of redemption. Learning this isn't a weekend hobby, it's a lifetime skill. Conditional acceptance, commercial discharge, and trust law are modern literacy. They aren't conspiracy, they're comprehension. Once understood, debt becomes optional, not inevitable. So what does that actually mean? It means freedom isn't in refusing the system, it's in mastering its language. Footnote. This section concludes that commercial literacy is essential for reclaiming financial autonomy.